Ansel, I don't know if you're muted or not.
I'm supposed to unmute when it goes live, when it goes back to me. Anyways, yeah, guys, welcome back to another episode of Fedwatch. I am Ansel Lindner. I'm here with my overworked co-host, Christian. How are you doing, CK?
You're not supposed to tell them about how overworked I am.
How you doing, man?
I'm doing good. I'm doing really good. Doing a lot as usual, but always excited to get into macro. The audience gets a double dose of macro. The last hour or so, maybe
Yeah.
2 hours, was Mark Moss. He was dropping bombs. I was listening to the end of that. But we have a great agenda lined up. But I guess first, let's get into some housekeeping. I have to shill BitcoinDay.io, the Nashville event. It's September 10th. I'm going to be emceeing. Ansel's going to be there. Half of the Bitcoin Magazine staff is going to be there. Robert Breedlove, Dylan LeClaire, Zach Voll's going to be there. There's going to be an enormous amount of signal at this event. It's going to be, close to 100 people. So the speaker to audience ratio is going to be absolutely fantastic. Well worth every penny. We got a 10% discount code BTCMAG10. So go use that so you can see us in Nashville. They've been showing Bitcoin Amsterdam this whole time, but hey, you got to talk about Bitcoin Amsterdam. That is coming up October 12th to the 14th in Amsterdam. I just booked my travel. I'm getting really freaking excited. This is going to be an absolute banger of an event. They got BM Live for 10% off of that. And then last but not least, we got the Bitcoin Magazine. We've been talking about the most recent issue, the censorship resistant, but To the Moon and the El Salvador edition are instant classics. And if you subscribe to the subscription, those have already passed, right? So what you want to do is make sure to buy those as well. We're also going to be rolling out different like collectors packaging for these. I'm looking into, have you ever seen like getting like trading cards graded or magazines graded where someone goes and says how perfect it is and puts it in plastic and puts a grade? Looking into doing some stuff like that with the Bitcoin Magazine. So a lot of good stuff coming out for Bitcoin Magazine in print and for the collectors out there. But Ansel, I'll pass it over to you. What's your housekeeping?
Oh, not much. I mean, we're covering a lot here today. We're going to go through some quick charts on Bitcoin, the dollar, energy markets, the energy crisis in Europe. Then I'm going to do a China update real quick. And Zoltan Pozsar, on my Telegram group, I've gone through his recent dispatch a couple times in different formats, and I'm going to try to do that here again as well, break apart some geopolitics. And he's thinking we're going to Bretton Woods 3, so this is right in line with Bitcoin, and I think we can learn something from reading through a few quotes from that dispatch. But like I said,
Zoltan is probably one of the most influential macro writers today. He's also speaking at Bitcoin 23 in Miami, so that's next May. So Zoltan, yeah, if you go over to b.tc/conference, click on Bitcoin 23. He is a preliminary speaker amongst a very impressive list. So check out that. But yeah, back to you, Ansel. Sorry. Quick shill.
No, that's cool. I think he's headquartered in he's with Credit Suisse, but I think he works in New York, and maybe he'll be moving down to Miami because all his bankers seem to be moving down to Miami. But anyways, I have been talking, like I mentioned there on my Telegram. I'm doing live streams over there almost daily, about 4 times a week, and I've been covering things like this Zoltan piece and the energy crisis and all that. So check out my Telegram. It's t.me/Bitcoin and markets. All right, that's my only shill. What should we do now? Get right into the charts?
Yeah, let's do it. Chris, you want to help us out? Thank you, sir.
All right, so this first one is Bitcoin, and it just looks, the term the term I think of is just flaccid. All right, this market is just flaccid. There's no pump at all in this chart, and it's below the 50-day moving average, far below the 200-day moving average. But there is something here, okay, guys. There is some strength. We haven't broken to new lows. At least we can say that there is some strength in this market. There's correlation with stocks, which is going to be the next chart, but there's correlation with stocks, and The stock market is much more volatile looking when you take a look at that chart. So Bitcoin has, I think, been a little bit more stable. So let's go to the next chart.
Ansel, buy the limp. That's the new meme. Buy the
by,
limp.
by the limp. All right. Well, that's the first word that came to mind when I saw this chart. Anyway, next slide is the stock market, and a lot of people are thinking we're going to new lows just because it sold off here about 9% from the recent high, but it charged up 18%. And remember, this is the first. If this goes to new lows, this will be the first bear market rally to break 50% going back up before it hits new lows. And I'm not saying that, that makes it absolute 100% that we won't go to new lows, but this is in the history of the stock market. This hasn't happened. So it's a pretty good signal in my opinion. And if we do drop here, the Fibonacci, we're not even close to that 61.8 Fibonacci, which would be a great bounce for the market. So I'm still thinking stocks will go higher throughout the rest of the year, as well as Bitcoin. So that's what I have for these correlated markets. Anything to add on that, or should we talk about the dollar a little bit?
No, let's move on.
All right, the next one is just an update from last week. I put on here, the green line is the DXY, and that's heavily weighted 60% against the euro. The black line is the broad trade weighted dollar, and that one is against, I think, 33, 34 other currencies. And as you can see here, the euro weighted one is really outpacing the broad dollar. So a lot of people are talking about how strong the dollar is getting now, and they think, it's just going to blow everything out of the water. But really, when we look at a broad-based dollar measure, it is strong. It is at highs, but it is not nearly as strong as the DXY would lead you to believe. And that's because I think the euro is still the sick man of the currencies.
Yeah, I mean, this was a really interesting distinction that I think you made last week, which is that it's really the euro that is taking a lot of the hits. And if you can actually hone in and say, oh, wow, it's actually the euro that's dragging the DXY down and not really anything else, it kind of also goes against the greater inflation narrative, right? So, yeah, I mean, also it kind of goes against the strong dollar narrative a little bit. And maybe it's just screaming Europe is having a lot of issues, no confidence, and obviously energy prices and energy futures are very, very alarming right now.
Right. And everybody jumps on the strong dollar now. We've been talking about it here for 2 years that the dollar was going to strengthen. And now everybody is kind of jumping on it and saying, oh my God, the dollar is going to rampage through the world and yada, yada, yada. Well, it kind of is, but it's not as dramatic as the DXY is showing right now. So I would concentrate on the broad trade weighted dollar. I think that's a better kind of signal of the strength.
So not strong dollar, but weak euro. Flaccid euro.
Well, yeah, no, it is a strong dollar,
Sick
but
euro.
but it's not a outrageously strong dollar like the DXY is showing. So I think there's you have to temper your dollar bullishness at this point.
But I'm trying to come up with new memes here, Ansel. I think that we need to start talking about the sick euro problem and focus less on the strong dollar.
Yeah, or Euro's DOA or something. I don't know. Euro's dead, something like that.
No, it has to be a process. Okay, let's move on.
All right, next slide is with this tweet from Andreas Steno. He's co-host with Macro Alf over there at Blockworks. And he's been kind of over the last week when everybody was really, showing all these charts about this exponential parabolic move in energy prices over there in Europe. He was like, whoa, let's hold off. This isn't the end of the world. And he was a voice of reason out there. And I really appreciate that. And on this chart, he's showing, if you go to the next slide, is just a close up of this chart. And it's the 1 year ahead German power prices. And it maxed out at 1,000 euros per megawatt hour, which is absolutely insane. But it has dropped 40% or so since then, down to almost 500. I mean, it's still elevated, but like everyone's screaming about the strong dollar now, everyone's screaming about energy prices in Europe, and they are high. Like the dollar is strong, the energy prices in Europe are high, but things don't go up in a exponential fashion forever. Just look at Bitcoin. It goes up exponentially, then it has a couple years where it cools off. So same sort of thing will happen in the power prices over there. If you go to the next slide, this was a response to this Andreas tweet. Oil in the US is $90. In Germany, oil equivalent power is no longer 1,600, but 800 in 1 year's time. And in the meantime, pay spot price way above 1,000 equivalent. Okay, so it is very high, and Andreas is trying to cool the jets of people screaming about this. But at the same time, this guy's saying, yeah, but it is really high. So I don't know what I'm trying to say here with this is just that it's not like the wheels aren't going to fall off today. So I don't know what I'm trying to say with all this, Christian. What's your thoughts on what I said there? Oh, you're muted.
This stuff is just like a grind, right? So nothing, the gradually, then suddenly, there's a lot of gradually, and it's just like usually there's not even really a suddenly. That's just when you actually notice things, right? So it's like that's the thing with the gradually meme. It's just pretty much always gradually. So for the most part, I think like with with any of this stuff, like you said, just like the Bitcoin price, it shoots up, demand gets destroyed, businesses shut down, and then it cools off, maybe to new elevated levels. Who knows? But that's typically how markets work. Like there's just a lot of psychology into this stuff, and they're complex. So I don't really have anything else super intelligent to add, but I guess just to try to like simplify what you're trying to say, this stuff is a process to everything, even catastrophe.
Oh yeah, and I mean, CPI is one of the big topics I know that you guys will Q and P just talked about with Mark Moss there. But here's a chart that a lot of people aren't looking at. So if you go to slide number 7, that is the U.S. gasoline futures, and it is really accelerating to the downside. So it went all the way from 420 down to about 250 now, and it continues to drop in an accelerated fashion. So when you look at July CPI, that was 0.0% month on month, and a lot of people said, oh, that's just an aberration, or this is not the right way to measure CPI. Well, August is probably going to be zero again, if not negative. So that's coming up in a little over a week, and we'll get to see what that is. But yeah, gas prices.
Kind of looks like the Bitcoin chart.
A little flaccid there at the end, yeah.
Everything is flaccid. That should be the title of the show. Flaccid markets.
Okay,
Flaccid
I'll type that up. All right, so that's all the charts that I have here. I'm trying to temper the doomsday scenario. Everything comes in its good time, and we will go to a Bitcoin system. The current monetary system will change, but it's not going to happen overnight. And some of these like really parabolic moves, nothing dies in a straight line. So you got to just wait and go through the consolidations and come out on the other side.
Did we talk about China yet?
No, we haven't talked about it. That's the next on the list. Should we go there?
Yeah. Let's go to that.
All right. So you guys all know that, this is going to be a topic on the Zoltan stuff that we talk about here in a second. But I want to take a look at some of the most recent developments this week over in China. And they are, to fix a debt problem, they're adding more debt. That is what China's doing. And to try to
Classic strategy.
And to fix overcapacity, they're spending more on infrastructure. I mean, it's just kind of ridiculous. But if you go to slide number 8, I'm going to read a little bit out of this article. Headline is China's State Council rolls out 19 targeted measures to tackle various economic challenges. New policies target specific challenges, inject confidence, experts say. The State Council, China's cabinet, on Wednesday unveiled 9 policy measures specifically aimed at various economic challenges, such as extreme weather and the troubling housing market, in the latest effort to boost the recovery of the world's second largest economy that's grappling with record-setting heat waves, sporadic COVID-19 outbreaks, and falling market sentiment. with the government funneling more targeted policy support into the weak links in the economy, a more solid rebound is on the horizon, observers said, betting on the Wednesday announcement to brighten the outlook for the Chinese economy. The measures were released after the Chinese A-share market saw sharp losses on Wednesday as investors grapple with global economic uncertainties. The Chinese economy has been in a recovery trend since June. Yeah, right. But the foundation for the rebound is not yet solid. According to a readout of State Council executive meeting on Wednesday, which was presided over by Premier Li Keqiang, the meeting called for policy implementation in a timely manner, making use of available tools to solidify the basis of the recovery while refraining from the flood of stimulus. Although the 19 policy measures among the 19 policy measures was the addition of more than 300 billion yuan, or 43 billion in quotas for policy and development financial instruments. So 43 billion more in loans to people that haven't taken out the billions in loans that they have, had a quota of 500 billion. They think 43 billion now is going to lead to this economic recovery. And a green light for central power generation firms, among others, to issue 200 billion yuan in bonds. So that's the last sentence. And yeah, they're just adding more debt, more infrastructure spending, hoping that this fixes the problems. Continuing on, if you go to the next slide, this is a story from Bloomberg. And I'm just going to zoom out here so I can see all the words. All right. These are the mega projects in China's $1 trillion infrastructure plan. So on top of all those billions that they're trying to get people to borrow, now they're also going to spend 6.8 trillion yuan, or $1 trillion on infrastructure. China is pumping trillions of yuan into infrastructure investment stimulus that could benefit the world's second largest economy well beyond this year's gloom of COVID lockdowns and property market turmoil. Beijing is making 6.8 trillion yuan of government funds available for construction projects, according to Bloomberg's calculations based on official announcements. Total spending could be even higher than that, 3 times that amount by some estimates, once bank lending and corporate funds are added. In the near term, infrastructure investment could give a boost to employment, providing much needed relief to millions of job seekers hit by the downturn. All right. And then they talk about what is all this money in China going towards. And I think they have 4 things here. So I'll just read one paragraph about each. More renewables than Europe. As deserts in North China are set to host an unparalleled buildup of renewable energy. In recent months, construction began on wind and solar power bases, which by 2030 will contain about as much renewable capacity as currently in all of Europe. So it worked so well for Europe, let's double down and do it in China. So that's the first thing. Second thing is the world's longest water tunnel. Construction of canals, dams, and reservoirs have been stepped up, with more than 800 billion yuan set to be invested in those projects this year. The most ambitious is a 200-kilometer-long tunnel moving water from the country's Yangtze River to a reservoir that feeds northern China, a scheme known as the South-North Water Transport Project. Now, this transport project has been ongoing. They, instead of tunnels, they had these large canals, that were just dug and then filled in with concrete, these big, long canals to take water from the south to the populated north. And over the first few years of the project, it's only gotten to about 1/3 capacity, or 1/3 of the projected capacity of the system. So they're just throwing good money after bad with more of these water projects. It would be the world's largest water tunnel, beating the current record holder in Finland, and parts of it would be as deep as 1 kilometer underground. Projects that move water around the country account for about 1/3 of China's water infrastructure spending, according to estimates by Wang Zhang and Sarah Rogers, researchers at the University of Melbourne. Planned projects could increase the amount of water available for use in China by 122 billion cubic meters annually, they estimate. That's about 5 times the amount of water Germany uses each year. So when I was reading this, it made me think of a tweet by Balaji that he just had this morning. So Odell had a tweet talking about in Jackson, Mississippi, they had some water problem where they were losing all water to the city of Jackson. And Balaji quote tweeted that and said, look, this is a sign of a descending world. And the ascending world is over here in East Asia, right? Well, this just shows you that China has their own water problems, and they're much, much worse than the United States water problems. So this increase in the amount of water is 122 billion cubic meters. That is about what? 100 cubic meters per person in China. Okay, 100 cubic meters per person. They average 400 cubic meters per person per year. The US averages 1,400 cubic meters per year per person. So even with this increase of 122 billion cubic meters, there's still less than half of what the U.S. per capita access to water is. So I just thought this was stereotypical Balaji trying to build up China, calling it the ascending power. And just because one city in America had water problems, that we're the descending world over here. So that's all I have for China.
I mean, you can't say it's just one city. I mean, there's a lot of
Flint,
cities,
Michigan.
But yeah. I mean, poor places. I mean, Mississippi is the poorest state in the union. Obviously, Jackson is one of the more populous areas there. I actually have some family in that area, so it's a little sad. But yeah, I mean, people have been China bulls for a long time, and a very strong narrative on Fedwatch is that China does not look bullish at all. So I threw in the chat, and Chris brought it up on the screen, but governments misallocate capital. It's classic. Honestly, I love seeing it. So this is the long game, the game of making governments less and less able to control our lives, and them misallocating capital and us being on the Bitcoin side. That's exactly what you want to see, right? Because they're making themselves relevant. They're spinning their wheels. They're spending their money and their credibility and resources, and it's just not gonna, it's not gonna deliver what they're looking for. A shocking stat, and I'm sure it's even worse than the stat is saying, but it was something like for every dollar the U.S. government spends, it gets like 25 cents of growth. So
yeah,
I mean, if it's even that, right? But I wonder what that stat line is for China, because I'm sure it's actually much, much worse. So the more central the planning, the worse the management of capital is.
Right. Well, that number for the US was very high, in the 50s and 60s and 70s. But as it approached 1, then we looked for other places to deploy capital, and that was in China, where that ratio was much higher. But you're right, as that ratio is crashing in China, it's crashing everywhere in the world, there's no place to expand, or smart place to put capital and expand credit. So that is the end state of this whole system. I also liked your point about the misallocation of capital. It's like people think that somehow these globalists did this central planning and got us to where we are today, as with the US of global hegemon, and Europe having cheap Russian gas, which we'll get to here with Zoltan stuff. But people think that the current world is a result of central planning, when it's not. Of course, the current world is a result of everything despite what the central planners tried to do. And now when they try to forecast the future, they think, oh, well, what do we think is the best central planning solution to fix the world? Who's going to be the better central planner? And that's just not the way to look at this stuff.
We should call the central planners the disruptors. They're market disruptors. The market is trying to do something, and these entities are, what in their walled gardens disrupting it.
Yeah, you're trying to come up with these memes, and you're going to leave me in the dust because I'm not good at that stuff.
No, hey, I'm here for the memes. You do the research, I do the memes. So it's a nice division of labor.
All right. Well, what do we got next? We got Zoltan stuff. Should we jump to that, or should we? Do
Yeah,
you have
let's
anything
go
to add on
Zoltan.
this? All right.
China's probably wrecked. Let's see what the central planners can do to get out of it, but I don't have a lot of faith in them. Go Bitcoin.
All right. So this is a piece from Zoltan Pozsar. He is the head of interest rate policy or something at Credit Suisse. He is extremely good at the plumbing of the system. So like repo market and interest rates and that kind of thing. He's very good at that. But now here, recently with Bretton Woods 3, this talking point that he's built up, he's venturing into geopolitics. And I think that that's just not his forte. So we're going to go through this. It's like you said at the beginning, it's made big waves. A lot of people are buying into things that Zoltan is saying. Maybe people haven't read this report, so I wanted to read it a little bit and let people get a flavor for this, and then maybe put my 2 cents in there of what I'm thinking. So first quote up, if you go to the next slide, is here we go. Global supply chains work only in peacetime, but not when the world is at war, be it a hot war or an economic war. The low inflation world had 3 pillars: cheap immigrant labor, keeping nominal wage growth stagnant in the US, cheap Chinese goods, raising real wages amid stagnant nominal wages, and cheap Russian natural gas, fueling German industry, and Europe more broadly. Implicit in this trinity were 2 giant geostrategic and geoeconomic blocks. Neil Ferguson called the first one Chimerica. I will call the other one your Russia. So in this very first paragraph, what I want to point out is he has these 3 pillars: cheap immigrant labor, cheap Chinese goods, and cheap Russian gas. But in the very first sentence, he says peacetime. These things work in peacetime. So I think he's just misidentifying this. Okay. These pillars are not the foundation. These pillars actually rest on the foundation of peace. There's something else underneath these 3 pillars that resulted in these 3 pillars. These are a result of the system. And what I would say, my 3 pillars, and the guys on my Telegram channel that are listening into this will have heard me say this three times now, but my 3 pillars are credit-based money. It's the form of the money, that's credit. We don't have commodity money, we have credit-based money. The second is some place to expand that credit into. And third is peace. So those are the 3 pillars that have built the last 75 years, not cheap immigrants, cheap China goods, and cheap Russian gas. Those things are a result of having peace in a time of credit expansion. And he also said low inflation. The low inflation world has had 3 pillars. Okay. We haven't had low inflation. Yes, CPI has been low, but remember, money is credit, and credit has expanded. Credit has expanded. That's what has allowed this whole world and this whole globalized system to be built up, is the expansion of credit. What is that? That's money printing. That's inflation. We've actually had an extremely high inflation decades. Now we have a low inflation decade where the credit is contracting. So I'm going to tie Bitcoin in here too, real quick, is that we have the old system, credit-based money, a place to expand credit into, and peace. Now we're going to the opposite. We have war. Ukraine is a first example, but we have lots of examples like Iraq, Pakistan, Bangladesh, Sri Lanka. All these places are kind of exploding right now. So peace is going away. Also, there's no longer any place to expand credit, right? Because if you, like we just talked about, the amount of growth you get per dollar spent or per yuan invested, whatever, is decreasing. There's no productivity of debt anymore. You can't get out of a debt problem by adding more debt. So the third pillar is credit-based money. And I think that is the pillar that Bitcoin sits on, right? That is the pillar that Bitcoin is going to take over. We can't have credit-based money in a system that doesn't have a place to expand credit and peace, right? So, Christian, I'm going to stop there. What's your reaction to that whole idea?
Damn. That was you just dropped the mic there. I'm not gonna lie. That was fantastic. Really articulated, I think, what you've been trying to say over the last, was it 110 episodes? We've been doing this show for a long time.
Yeah.
So damn, I mean, we got to clip that part. So I don't know, Chris, if you can take some notes, but that needs to hit the internet. I think you did an excellent job just articulating your thesis around credit-based money, the Bitcoin bull case in its demise as we, lose peace, lose credit expansion, inflation. We go into deflationary times. These things change, we're gonna need Bretton Woods 3, aka or Bretton Woods 2.0, aka Bitcoin's opportunity. So Bitcoin is for enemies, and in a world where people are not, working together, that's where I think really Bitcoin shines. And I'm very optimistic based on what I'm seeing from Bitcoin and how it is starting to, interplay throughout these different global situations that are playing out.
Yeah, I'm totally bullish on Bitcoin too. And one of the things in my Telegram channel that somebody asked me was, you know, hey, he was starting to lose confidence that it's going to be the unbanked that get Bitcoin over the hump. And I said, yeah, that's a conclusion that I've come to as well, that it is the big money. So I like seeing Fidelity, Vanguard, BlackRock, these guys offer Bitcoin investment to their clients, because that's where I think the next real big wave of growth in this market is going to come from.
I mean, I think it's both. That's the beautiful thing about Bitcoin is everything
Yeah,
is good for Bitcoin. It's gonna get the big money and it's gonna get the pleb per pleb, you know, path, right? People don't
yeah,
really exit Bitcoin. Maybe they enter shit coins, maybe they trade, but once you're in Bitcoin, you're in Bitcoin, right? Like you are in that overlay. You understand how it works, and you'll never be at a point where you're not, trying to accumulate some sort of wealth in that fashion. So, uh, my thesis, I would love to do a deep dive with you on kind of like your thesis and try to like, articulate it in a succinct way. But if I could articulate my thesis, is that like, I guess the best way to say it is in a Bitcoin Tina quote, which is that Bitcoin is like water. You can't stop it and it gets everywhere. So like, you
yeah,
can't stop Bitcoin. It's going to go pleb by pleb, and it's going to get the tsunami of big money. It really is. And that's the beautiful thing about working with asymmetric open source technology that is Bitcoin. Is it operates on a new level. I put out a tweet I think last week where I was trying to say along the lines of like Bitcoin doesn't make like Bitcoin. Obviously, there are compromises in like there are compromises in the terms of like Bitcoin's design. Like Bitcoin can't do everything on the base layer or whatever. There are certain compromises on that front. But in terms of like, here is Bitcoin system in existence and it's operating, like Bitcoin doesn't make compromises there, right? Bitcoin doesn't worry about defrauding individuals. Bitcoin doesn't worry about, it, like Bitcoin has no worries, it has no mind, it's just there, it just exists, and those who use it and are moving it forward, period, end of story. So whether they're a dictator, whether they're a pleb, whether they're anything, like they always carry Bitcoin forward. So that's the idea. Like Bitcoin is like water, you can't stop it, it gets everywhere. It's going to evaporate, it's going to show up somewhere else. It's just teleporting and digging and moving and breaking down rocks and moving mountains, etc. So it's just this insane force. So
yeah.
end of rant for me. Back to you,
Well,
Ansel.
it's like water because everyone needs it, right? And because there is no
Boom.
substitute. So you can't,
Both.
like, there you go. So
Man,
yeah, like
more mic
water.
drops. Man, I'm the memer. You're just dropping mics.
But I liked what you said about the base layer there, and for my thoughts on what's going to drive this forward. I mean, yes, you're right that it's everybody's going to drive it forward, but the big money, I think, when they move, in mass, it's going to make a huge difference, and they are going to be using it for base layer things. So base layer, large settlement, and that will give time for Lightning, even though it's come leaps and bounds in the last few years. And I've just seen a lot recently about how much capacity it's been adding recently. It still gives time for layer twos to develop and mature if these big players are using layer one. You know what I mean? So that's kind of what I see on that. But I have more on Zoltan. Should we go on to the next quote?
Yeah, no, let's continue.
Okay. I'll try not to repeat myself too much here, but okay, finally, the US got very rich by doing QE, but the license for QE came from the low inflation regime enabled by cheap exports coming from Russia and China. And you know, I disagree with that right there off the bat. Naturally, the top of the global economic food chain, the US, doesn't want the lowflation regime to end. But if Chimerica and Eurussia are over as unions, the low inflation regime will have to end. Period. As we noted in our prior dispatch, the special relationship between China and Russia, or Chussia, I think I say that right, Chussia, is a powerful one. A marriage of commodities and industry, uniting the largest commodity producer and the factory of the world, potentially in control of Eurasia. So one thing that they forgot in there, or Zoltan forgot, is the customer. So you have the commodities, you have the factory, but who's going to buy all this stuff from you? Okay, the Europe and the U.S. is what, like say roughly 50%, maybe 40% of the global economy, and they are the consumers. So who is China going to sell all this stuff to? I just think that this is a little bit naive on thinking that Russia and South Africa can buy all of these Chinese goods, because they can't. So I think right now you have a marriage of convenience between China and Russia, but it's not a match made in heaven, if you will. Okay, let's go on to the next one, unless you want to break in there, Christian. Okay, so
Go for it.
Okay, today the assumption among investors is that globalization is too big to fail. But globalization is not a bank in need of a bailout. It's in need of a hegemon to maintain order. Bingo. Even Zoltan understands this, that the US has been the hegemon that has been maintained this peaceful credit expansion era, okay, with things like the UN and the WTO and, dare I say, the WHO and the IMF. But those things are all losing confidence. The international order, which I will call the old world order, is losing confidence and falling apart. That is, the US was hegemon, but we were hegemon with this order, right? And that order is falling apart, and the US is moving back. So the systemic event is someone challenging the hegemon. And today, Russia and China are challenging the US hegemon. For the current world order and its trade agreements trade arrangements and network of global supply chains to survive the challenge must be squashed quickly and decisively in the spirit of General Powell's doctrine. And he talked about that another place in the dispatch. So, but he says for the global supply chains to survive, I don't think they're going to survive. Like, why do they need to survive? He just is putting it out there like that the Chussia hegemon is going to result in the same sort of globalization that we have right now, which I disagree with. And I have one last quote. Should I just keep on rolling, or do you have something to add there, Christian? Keep on rolling. All right. So the last quote, and you'll probably, guys, have heard a lot of people talking about a sustained higher inflation environment for a long time. CPI environment. And it's not really inflation, it's CPI. But the Zoltan kind of lays out right here a reason underneath why everyone thinks that. So let's read this real quick. But we can't win by slowing progress. We'll also have to progress by building. And that's where industrial policy comes in. As an investor, you care about the inflationary consequences of Russia and China challenging the US hegemon. Where inflation goes, policy rates go. Or if not, financial repression is an issue. Either way, you care, especially if you are a bond house or if you depend on fixed income. These are the scary times when the euthanasia of the rentier is at risk. To ensure that the West wins the economic war to overcome the risks posed by our commodities, your problem, and chips from our backyard, your problem, and our straits, your problem. These are all like little sayings that he covers in the dispatch. The West will have to pour trillions into 4 types of projects starting yesterday. 1, rearm. 2, reshore. 3, restock. And 4, rewire. And then he goes in a long explanation after this about how each of those things is going to be pushing up prices. My pushback on this is it's central planning. You know, that there's no need to necessarily do this stuff. The market will move where the market's going to move. And also, second pushback against this is that in a deglobalized world, prices, inflation rates, etc., are not monolithic. So we have grown accustomed over the last several decades in a globalized world where if steel prices go up in Japan, they go up in the United States. Or if wheat prices go up in Russia, they go up in Africa or whatever. But that's not necessarily the case. That's not how it always has to be. And in a deglobalized world, you're going to have different pockets of price structure, of economic structure. So that's what I have to push back on that. That's it. That's my last slide here today, Christian. So what do you got, buddy?
No, I mean, I think that there's a lot to unpack here. Obviously, it's really interesting to kind of think through these different theses for how things are going to play out. Um, Obviously, your thesis for a long time has been that deglobalization is happening, more of an isolationist thought process. And obviously, if supply chains start localizing, then the price structure is going to be a lot more kind of affected by the geography and other factors that kind of play into the production of that in the local economy. I have a hard time seeing a world that's like, no one talks to each other. But I do kind of buy into the fact that like the pendulum is swinging towards localization, and there may be a localization extreme before we start swinging back towards more interconnectedness. But benefits of distributing things is robustness, right? So if there's chaos here or chaos there, it doesn't affect the areas around it because they're less intertwined. So, I mean, maybe that's just the ethos of what the rest of our lives are going to be. Who knows, how long this kind of trend is going to continue. But obviously, it is very interesting to kind of see your thesis up against Zoltan, who obviously is someone who is affecting and influencing a lot of people. And
Yeah.
he's really, his talk track, I think, is a lot more along the lines of the more mainstream kind of like intellectual narrative about this stuff. Not to say that he's not an original or something, anything like that by any means, but it is very much, from what I can tell, very, very aligned with this idea of like China is rising, the West is falling. There'll be a new global hegemon to maintain this kind of global, globalization, like this global market. And it's just interesting seeing you as the contrarian Bitcoiner, the rebel Bitcoiner, really
Yeah.
articulating the opposite take, which I think honestly I generally align more with too. But obviously we do this show together, so heavily influenced by yourself.
Yeah, I mean, he's obviously way more accomplished in his role there at Credit Suisse, and he has made some great calls. Like he predicted the repo rumble back in 2019. I think at least that's when it came across my radar was he predicted that pretty much to the week. I think he said like the second or third week of September we're going to start seeing some problems. So like he really nailed that one. And then he also nailed the reverse repo facility from the Fed, that it was going to hit $2 trillion was his estimation, and it hit 2.1 trillion. So yeah, he's been exact on the money in the plumbing of the system, though. So that's where I'll push back against him, is I think that I will default or whatever to all his opinions on the plumbing of the system, but in this geopolitical sphere, and I would say even monetary theory sphere, he doesn't. I don't think he is getting the whole picture. But anyway, yeah. One other thing that you mentioned there was credit based, or no, was localization, and you don't think it's going to be completely isolated, and I totally agree with that. But in regions that are kind of separated, so there's going to be a region that's kind of dominated by the US and a region that's kind of dominated by China, etc. To trade within those regions or between those regions, you will need a commodity money. Credit-based money isn't going to do it, because uh, credit requires trust and peace, and there won't be that in the world. So yeah, that's what I would say about Bitcoin's role in the future between these kind of regional deglobalized zones of the world. Yeah.
So would it be far-fetched to say something along the lines of there potentially are economic zones, maybe with their own currencies, and then
Yeah.
Bitcoin is kind of like the substrate between all of them? Is that a possible end result of this kind of like next paradigm?
Yeah, man. I think that Zoltan talks about Bretton Woods 3, and he says it's going to be like a basket of commodities and bricks or something like that. And I think that Bretton Woods 3 might be like Bretton Woods 1, except for with Bitcoin. So where Bretton Woods 1 was um, the dollar pegged to gold, and then all other currencies pegged to the dollar, I think it could be that the dollar pegs to Bitcoin. And that sounds outlandish to say right now. I know it sounds outlandish. I mean, it sounds outlandish for me to say it, but like that is kind of where all these roads are leading, is that the dollar becomes backed in some way, shape, or form by Bitcoin. And then the other currencies can peg to the dollar. So that is, maybe we do a Bretton Woods 3, but it looks an awful lot like Bretton Woods 1.
How long until some sort of Bretton Woods 3 that looks like that, that's a Bitcoin dollar? Like how far out, if you would put your best guess on that, Ansel? Like in terms of
Oh
like,
man.
we're looking at Bitcoin today at like
Yeah.
Bitcoin's not even $1 trillion asset. Like,
Yeah.
yeah, I mean that's a long road, right? To get to the point where you could do that.
Yeah, and the rate of growth of Bitcoin since 2017, I would say, puts that a little bit longer period of time. If you would have asked me in 2016, I would have thought, oh, okay, Bitcoin does a 20x every 4 years, but Bitcoin really hasn't done the 20x in this 4 years. It kind of did a 3x or 4x. So it might take a while longer, but I would put it 10 years from now, before the dollar is backed by Bitcoin. That will be easy. That will be a much easier sell when you look at all, like BlackRock's portfolio is 5 or 10% in Bitcoin, right? Even 5% or whatever. If BlackRock's portfolio is 5% Bitcoin, that's an easy sell to say, oh yeah, we could back cash by Bitcoin, and it's just a matter of time before that happens.
All right, sir. Well, I'm getting the signal from Chris that it is all right to wrap this one up. Y'all, make sure to go to Bitcoin Day Nashville if you are in the Southeast region. Even if you're not, it's going to be the most high signal event of, like, I don't know, like, I guess probably the year, in terms of like you get to just hang out with us in terms of the speakers. Like, you're not going to, maybe not signal, maybe the most, I guess, most up close and personal, right?
Yeah,
Like it's almost like a
cozy.
meetup. Yeah, it's like a meetup with like really solid movers and shakers in this space. All of the Bitcoin Magazine staff's going to be there. Like I said, it's in our hometown, so really want to recommend that. Of course, get a Bitcoin Magazine. Go to the Bitcoin conference. That's the usual shills. Follow me on Twitter at ck_snarks. Follow Fedwatch, boost Fedwatch. We're Lightning enabled,
Yes.
and so I need to get you set up as getting the splits on that. But yeah, and hey, if you're watching on YouTube, if you're watching on Rumble, if you're watching on Twitch or LinkedIn, pound that like button. We bring this show consistently every single week, and our track record is pretty good on making these calls. We're early on the strong dollar. We are early on the anti-inflation narrative. We were early on the China is going down narrative. We were early on the Europe is going down narrative. We're early on a lot of things. I mean, I got to credit Ansel for most of that, but this is where the signal happens. Ansel.
Yeah. Bitcoinandmarkets.com. That's my website. I do a newsletter there. I'm switching it to Mondays instead of Fridays. So after 200 issues, I'm going to Mondays, which is a big change for me. But I do have also a Telegram channel, so you can check that out, as well as Twitter at Ansel Lindner. And Bitcoin Day Nashville. They also have other ones that are in other towns. So make it to Nashville, because it's going to be a very high speaker to audience ratio. But if you can't make it to that one, check for other Bitcoin Day opportunities in your local area, because I'm sure they'll have something there. So, all right, guys, that's it.